So today I'm going to talk student loans. I know, exciting. But as you might have heard, it's all out in the media that student loans are coming out of deferment. So if you are somebody you know that have been in deferment on the student loans that you have incurred, and you are especially going to go through the home loan process, know that because of this shift, how it gets reported, meaning that if it's coming out of deferment and maybe you've been notified, but you haven't been able to pay a payment, maybe you've applied for the payment program where it's income-based repayment, there's so much happening out there that you need to know where you stand with your student loans, because what you don't want to happen, whether you are looking to purchase a home or honestly, whether you're just looking to rent a home or anything that's going to require your credit be pulled, you want to understand the status of your student loan and be sure that you're being proactive on this. And this doesn't just apply to people themselves that have taken out student loans. If you are a parent and you have co-signed for somebody else that has a student loan, my number one recommendation is reach out to the student loan servicer and ask for a status update. Are they reporting you delinquent? Because it's estimated 9 million people are coming out of deferment and going straight into collection. What does that mean with regard to a credit score and a credit profile? You can expect your credit score to drop dramatically if that thing hits collections. Now, can you unravel it? Can you work with the servicer and all that stuff? You can. But if we can get ahead of this and do that by reaching out to the student loan servicer, ask for a transaction summary of what is going on with your student loan. Are they reporting you delinquent? Did you even know it came out of deferment? But be proactive with this, guys, because I have seen things like this in the past, not exactly like this, because this is huge and it impacts so many people. But not knowing what is reporting on your credit report and thinking everything is okay, and then you are going to purchase a car, or you're going to get your automobile insurance, or you want to purchase a home. The timing of what is going to be reported through your loan servicer on your student loans can impact all of that. So be proactive, reach out, and better understand what is going on with your student loans. Now, if you're going to go through the home loan process, a few things we're doing to try to help protect people is, one, we're just having the conversation up front at the pre-qualification stage. And we're asking, hey, do you have any student loans? Or if you are a parent or a grandparent or somebody that is co-signed on student loans, especially important for you, this also will impact your credit if you don't get your arms around what is about to happen. Secondly, realize that if you are going through the home loan pre-qualification process, your lender may ask you to reach out to your student loan servicer and just get a summary, get a transcript of what's going on with your student loans. That way you all are aware and you're approaching your pre-qualification proactively. Here's what I'm afraid of, and this stuff happens. So a credit report for a home loan pre-qualification is good for 90 to 120 days. And that means you would have to get pre-qualified, find the home, and close within that time frame. Ours is 120 days. Some lenders have 90 days. Nevertheless, know that there's an expiration point on that credit report itself. So let's walk through this. Let's say you have reached out to your student loan servicer. You have been proactive. You know what's going on with your student loans. Great. Get that to your lender, whether that's us or anybody else, so we understand what's going on. But if you're not being proactive, and let's say that the lender pulls your credit and your credit score is fine, they may require additional documentation to get into what's really going on that trade line from your student loan company. Because a lot of what we're seeing right now is student loans that were in deferment. The last active date or the last update date on your credit report is a year ago. It's 2 years ago. It's 9 months ago. So your lender is naturally going to go back in and need to update that trade line. And if they do that, and now you've missed your window and potentially that student loan has gone into collections and it's going to report you were 30, 60, 90 days, 120 days, whatever it's going to report, any of those scenarios can dramatically drop your credit score. So if you went in through the pre-qualification process, your lender said, great, good to go. Here's your pre-qualification letter. You get out there shopping. But during the process, they know that they need to update that trade line. If when they update that credit report or that trade line with, let's say, a credit supplement, it doesn't even have to be a brand new credit report. It can drop your score dramatically. So this is why I really just want to get this information out there that we're being proactive. Like, That's how we navigate things that happen. Let's all be speaking the same language. If you have questions about how this potentially impacts you or somebody you've co-signed for, do not hesitate to reach out, especially if you're going to go through the home loan process. And if you're not, and this is just kind of general awareness, that works too. Reach out to your student loan servicer and be 100% clear and aware of when your payment comes due. Have they turned you over to collections? Are they reporting you delinquent on your credit reports? And just know what that impact may be if in fact they are doing that, and get it resolved. I mean, be proactive. Also, remember that if you are going to buy a home and you're thinking about using a government-backed loan, so FHA, VA, USDA, if you're thinking about that, part of that home loan process that lenders are required to do is pull a KAIVRS report. And we will pull the KAIVRS report up front. Let's say KAIVRS is clear. And a KAIVRS report essentially just says you don't have any federal debt that you've been delinquent on. But a lot of lenders are now going to also start pulling that KAIVRS report prior to close of escrow. So for all you real estate agents out there, just know that the student loan scenario and what's taking place, it can be a potential time bomb. So working closely with the buyer's lender, working closely with the buyer, we're all in the same conversation. We're going to do everything we can to navigate a smooth process. And part of that just comes down to clear, concise communication. So again, if you have any questions, don't hesitate to reach out to a Kelly Zitlow mortgage advisor, 480-725-0150. We lend all across the country, so happy to help you with your home purchase needs. And especially if you've got student loans, let's talk.